NVIDIA has become one of the most influential players in the tech world, especially with its groundbreaking advancements in AI and GPU technologies. From fueling the AI boom to leading the gaming industry with its GPUs, NVIDIA has managed to position itself at the heart of technological innovation. But how sustainable is this growth? With a fluctuating stock price, shifting investor sentiment, and the increasing pressure of competition, NVIDIA's future is far from certain. In this video, we will explore the latest developments surrounding NVIDIA, from its stock performance to new innovations and the challenges it faces. Stick with us until the end, because the last point will reveal a secret that could change the way you view this tech giant. 10. NVIDIA's stock performance in 2025. As of January 23, 2025, NVIDIA's stock price stood at $147.22, reflecting a mix of significant growth and notable volatility. The company's stock saw an impressive surge in 2024, primarily driven by the hype surrounding AI advancements and its leadership in the GPU space. However, as 2025 commenced, the stock price experienced a dip, signaling the fluctuating nature of market dynamics. This volatility can be attributed to broader economic conditions, investor sentiment, and the challenges that tech companies, including NVIDIA, face in navigating global markets. What makes NVIDIA's stock performance particularly interesting is that it's not solely tethered to the excitement surrounding AI. While the company's innovations in AI and GPUs have undoubtedly given it a competitive edge, its stock price remains highly sensitive to macroeconomic factors. Variables such as interest rates, inflation, and geopolitical risks heavily influence its market value. While NVIDIA may have strong long-term growth potential, short-term volatility is an inevitable aspect that investors must consider when evaluating the stock. In addition, NVIDIA's stock performance underscores the broader reality of the tech sector, where external pressures and investment sentiment often clash with the promises of innovation. The interplay between cutting-edge advancements in AI and the unpredictable nature of global financial markets will be a key factor in determining the company's future performance. Investors must weigh the promise of continued innovation against the challenges of market turbulence. Ultimately, NVIDIA presents a case of potential tempered by risks. The company's breakthrough technologies could propel it forward, but external forces such as economic shifts and investor uncertainty remain significant hurdles. Investors should approach with caution, being mindful of both the opportunities and challenges. 9. Jensen Huang's press conference at CES 2025. At CES 2025, NVIDIA CEO Jensen Huang made two significant announcements that have the tech world buzzing. The first was the introduction of NVIDIA Cosmos, an ambitious platform designed to support AI models across a range of industries, including healthcare, autonomous vehicles, and robotics. This platform has the potential to reshape the AI landscape by providing the computational power needed to drive transformative technologies in various sectors. Cosmos represents NVIDIA's commitment to expanding its influence in the AI ecosystem, offering tailored solutions for industries poised for massive growth. The second major announcement was the unveiling of the GeForce RTX 50 series, the next generation of gaming GPUs. These new GPUs promise a 30% performance improvement over their predecessors, offering superior efficiency and real-time ray tracing. For gamers and developers alike, the RTX 50 series represents a significant leap forward in graphics performance, cementing NVIDIA's position as a leader in the gaming space. However, despite the groundbreaking nature of these products, the stock market's reaction has been relatively muted, highlighting broader concerns about economic uncertainty. The lukewarm stock market response reflects investor caution, which has been exacerbated by broader economic challenges. While NVIDIA's new products showcase the company's innovative capabilities, external factors such as inflation and interest rate concerns have dampened enthusiasm among investors. Despite the potential of these new announcements, market conditions have created a climate where the excitement surrounding technological advances doesn't always translate into immediate stock gains. For NVIDIA, the challenge moving forward will be to maintain the momentum from these product unveilings while navigating the broader economic landscape. Investors will need to monitor how these new innovations influence the company's market performance, especially as global economic uncertainties continue to weigh heavily on tech stocks. 8. Retail investors and market conditions. Retail investors have become an increasingly influential force in the stock market, particularly when it comes to tech stocks. NVIDIA, with its strong reputation in the AI and GPU markets, has attracted significant attention from this group. As tech stocks remain highly coveted, retail investors have been eager to get involved with companies like NVIDIA, driven by the allure of high growth potential and the booming AI sector. However, this influx of retail investors bring a higher level of risk, as many individuals may not fully comprehend the volatility and unpredictability that often characterize tech stocks. The impact of retail investors is especially pronounced when considering broader market conditions. With the upcoming US presidential inauguration and uncertainty surrounding regulatory changes, retail investors might find themselves in a precarious position. Should the government impose stricter regulations on tech companies, NVIDIA could face significant headwinds. Investors must ask themselves whether the potential rewards of investing in a high-growth company like NVIDIA are worth the risks of navigating such a turbulent market. In addition to regulatory uncertainty, the broader economic environment plays a crucial role in shaping investor sentiment. Retail investors may be swayed by headlines and trends, but macroeconomic factors such as inflation, interest rates, and geopolitical tensions could significantly affect the market. This external volatility makes it all the more important for investors to approach their investments with caution and to stay informed about the larger economic forces at play. Ultimately, retail investors looking at NVIDIA should balance their enthusiasm with a solid understanding of the risks involved. The company's innovation and market dominance in AI and GPUs are undeniable, but those considering an investment must be prepared for potential downturns and market volatility. Diversification and a long-term perspective will be key to navigating these challenges successfully. 7. Implications of the 2025 U.S. presidential election on tech stocks. The 2025 U.S. presidential election is set to introduce a wave of uncertainty into the stock market, and tech stocks like NVIDIA are no exception. Policy changes regarding technology, AI, and international trade will play a pivotal role in shaping the future of tech giants. Shifts in semiconductor export policies, changes in taxation, or the introduction of new regulations could directly impact NVIDIA's operations and stock performance. Investors must remain vigilant, as these political developments could create significant headwinds or opportunities for tech companies. One of the major concerns for NVIDIA and other tech companies is the potential for changes in U.S. foreign policy, particularly with regard to trade relations with China. Any restrictions or tariffs on semiconductor exports could have a direct impact on NVIDIA's ability to grow its global market share. Given that China is a major market for NVIDIA's products, these geopolitical tensions could hurt its bottom line. Investors need to consider how these external factors might affect the company's financial performance, especially in an environment marked by political volatility. Moreover, the outcome of the U.S. presidential election could influence domestic policy changes that may benefit or hinder NVIDIA's growth prospects. With AI and technology playing such a significant role in the economy, any shifts in governmental priorities could have far-reaching implications for companies operating in this space. NVIDIA's ability to adapt to these policy changes will be crucial in determining how it navigates the post-election landscape. Investors should approach this period of political uncertainty with caution, understanding that the election's outcome could have a profound impact on the market. While the AI boom has fueled optimism around companies like NVIDIA, the potential for policy shifts and geopolitical tensions could introduce new risks. Preparing for these uncertainties will be crucial in making informed investment decisions during this volatile time. 6. What you should know about valuation risks. NVIDIA's stock currently trades at a high price-to-earnings ratio, signaling that investors expect significant future growth. However, this premium comes with its own set of risks. While the company has shown impressive innovation and growth potential, its stock is highly vulnerable to market fluctuations. A small miss in earnings or a change in investor sentiment could trigger sharp price corrections, making NVIDIA a risky investment for those seeking stability. In a market where expectations are already sky-high, the potential for significant downside is considerable. Tech stocks like NVIDIA, especially those with high valuations, are often more sensitive to broader market movements. A downturn in the tech sector or changes in the competitive landscape could cause substantial price swings, leaving investors exposed to considerable losses. For anyone considering investing in NVIDIA, it's important to ask whether the company's current stock price truly reflects its growth potential or if it is overpriced based on future projections. Valuation risks are particularly significant for long-term investors, while NVIDIA's strong position in the AI and GPU markets provide a solid foundation for growth. These external factors could pose serious challenges. The company's valuation must be carefully assessed to determine if it's justified by its growth prospects or if market hype is driving the price beyond its intrinsic value. As with any high-growth stock, caution is essential. While NVIDIA offers tremendous potential, the risks associated with its high valuation cannot be ignored. Investors must evaluate the company's growth trajectory alongside the volatility of the tech sector to make informed decisions about their investments. 5. Geopolitical and economic factors at play. As a global player, NVIDIA is highly susceptible to geopolitical and economic factors that can impact its stock performance. Trade tensions between the US and China are one of the most significant risks facing the company, with semiconductor exports being a key part of NVIDIA's business model. Any restrictions or tariffs on these exports could have a direct impact on its global operations. Moreover, the broader economic environment, including inflation and interest rate fluctuations, continues to influence market sentiment and investor behavior. In addition to trade concerns, the ongoing uncertainty surrounding the US presidential election and potential regulatory changes adds another layer of complexity. Policy shifts on issues like taxation, AI regulation, and international trade could significantly alter the operating landscape for NVIDIA. As a company with global operations, NVIDIA must navigate these geopolitical challenges carefully to ensure continued growth and market stability. Macroeconomic factors like inflation and rising interest rates also play a crucial role in shaping investor decisions. For NVIDIA, these pressures could affect its ability to maintain profitability, particularly if demand for its products slow down or if global trade policies restrict its reach. Investors should remain aware of these external factors as they can have a profound effect on NVIDIA's future performance and growth prospects. Given NVIDIA's reliance on a global supply chain and international markets, investors must be prepared for the impact of geopolitical and economic uncertainties. These factors are beyond the company's control, but they play a critical role in shaping its ability to maintain its competitive edge and continue expanding its market share. Understanding these dynamics will be key for anyone considering an investment in NVIDIA. 4. Competitive pressures in the AI space. NVIDIA has been a leader in the AI and GPU sectors for years, but the competition is becoming increasingly fierce. Companies like AMD and Intel are making substantial strides, introducing innovative products that aim to capture market share from NVIDIA. AMD's RDNA architecture, for example, is closing the performance gap with NVIDIA's RTX line of GPUs. Intel, on the other hand, is also venturing deeper into the AI space with their own GPU offerings and AI acceleration technologies. This rise in competition is likely to put pressure on NVIDIA's dominant position in the market. Moreover, new startups are entering the AI hardware space, often focusing on custom chips designed specifically for AI workloads. These chips, which can outperform traditional GPUs in certain applications, pose a potential threat to NVIDIA's long-established market position. Startups like Cerebras and Graphcore are developing specialized AI accelerators, and their presence is forcing NVIDIA to keep up with the rapid pace of innovation in the space. For investors, understanding the shifting competitive dynamics is essential to evaluate NVIDIA's ability to maintain its leadership. NVIDIA has the advantage of its robust CUDA ecosystem, a platform that has become the standard for AI research and development. This ecosystem, coupled with NVIDIA's strong presence in data centers and its deep ties to the AI community, still gives the company an edge. However, as competitors like AMD and Intel improve their own platforms, NVIDIA will need to continually innovate to stay ahead. The future success of NVIDIA will depend on how well it can maintain and expand its ecosystem while warding off the increasing competition from rivals. For investors, this means that while NVIDIA remains a dominant force, the growing competition presents a challenge. NVIDIA's market share could be at risk if competitors continue to innovate at a faster pace. Therefore, investors need to carefully monitor the competitive landscape and evaluate whether NVIDIA can sustain its growth amid this intensifying competition. It's crucial to understand that NVIDIA's competitive advantage could be eroded over time if it fails to stay ahead of the curve. 3. The need for caution in investing. Investing in NVIDIA requires careful consideration, especially in light of its stock's volatility and the evolving tech landscape. While NVIDIA is at the forefront of AI and GPU innovation, these advancements do not come without risk. The company's stock is highly sensitive to fluctuations in the tech market, which is often affected by factors like market sentiment, regulatory changes, and shifts in consumer behavior. For investors, this volatility can result in significant short-term losses, even if the company's long-term potential remains strong. The excitement around AI and the potential applications of NVIDIA's technologies can lead to inflated expectations, but investors need to temper their enthusiasm. It's easy to get caught up in the hype of an innovative company, but understanding the risks involved is just as important. With tech stocks like NVIDIA, it's essential to recognize that the future is uncertain and the stock price could experience substantial swings in response to changes in the market or the broader economy. Diversification is a key strategy when investing in high-growth companies like NVIDIA, given its volatility. Investors should avoid concentrating too much on their portfolio in NVIDIA alone. Spreading investments across different sectors or companies helps mitigate the risk of substantial losses. Additionally, being aware of the broader market conditions, including interest rates and economic downturns, is crucial for making informed investment decisions. Tech stocks like NVIDIA are particularly vulnerable to macroeconomic trends, and it's important to be prepared for unexpected shifts. Finally, long-term investment perspective is essential when considering NVIDIA. The company's advancements in AI and GPUs show immense promise, but achieving substantial growth requires patience. Investors should be prepared for periods of underperformance and take a strategic approach to weather the ups and downs that come with investing in an industry as dynamic and competitive as AI. 2. Economic slowdown and impact on tech companies. The current global economic slowdown has left its mark on many industries, and the tech sector is no exception. For NVIDIA, this has translated into a reduction in demand for consumer electronics, which directly impacts the sales of GPUs used in gaming, AI, and other consumer applications. While AI remains a growth area, the slowdown in other sectors of the tech market could weigh on NVIDIA's overall performance. It's important to recognize that, despite the promising potential of AI, NVIDIA's success is also closely tied to the broader health of the tech industry. This economic slowdown is also affecting the demand for cloud computing services, which has been a key driver of revenue for NVIDIA. As companies cut back on spending or shift their focus to more cost-effective solutions, the demand for high-end GPUs could face some headwinds. Even though AI technology continues to advance, the overall economic climate could limit the scalability of NVIDIA's offerings in the short term. For investors, this creates uncertainty, as the company's growth potential might not be fully realized if the global economy continues to struggle. Despite these challenges, NVIDIA's focus on AI and data centers positions it well for long-term growth. The company is actively diversifying its revenue streams, and its involvement in sectors like automotive, healthcare, and cloud computing helps mitigate some of the risk associated with a slowdown in consumer spending. However, the ability of NVIDIA to navigate this economic turbulence will be key to its continued success. Investors should closely monitor how the company adapts to these challenges and whether it can maintain growth even during times of economic hardship. The economic slowdown also has a broader impact on investor sentiment. As global financial conditions tighten, investors may become more risk-averse, leading to shifts in how they allocate capital. NVIDIA, as a high-growth tech stock, could be particularly vulnerable to these shifts. For investors, it's crucial to assess how the company will weather this economic storm and whether it will continue to deliver strong returns in the face of such challenges. 1. Navigating NVIDIA's volatility. NVIDIA's stock price is known for its volatility, which can be attributed to the dynamic nature of the tech industry and the company's pivotal role within it. For investors, this volatility is both an opportunity and a risk. While NVIDIA's growth potential in AI and GPUs is undeniable, the stock price can experience sharp fluctuations, making it essential to approach investment in the company with caution. The tech sector is highly susceptible to macroeconomic events, and changes in interest rates, geopolitical tensions, or regulatory decisions can quickly impact affect stock prices. For those considering investing in NVIDIA, it's important to recognize that the stock price can swing significantly, even based on short-term factors. This unpredictability means that investors should be prepared for the possibility of large price fluctuations. While NVIDIA has long-term potential, the short-term market volatility could lead to sharp corrections, especially in times of economic uncertainty. Staying informed about the broader economic and geopolitical landscape will help investors make strategic decisions when investing in NVIDIA. The competitive pressures faced by NVIDIA also contribute to its stock volatility. As competitors like AMD and Intel make inroads into the AI and GPU markets, NVIDIA's market share could be impacted, leading to fluctuations in its stock price. Furthermore, market sentiment can be influenced by news regarding NVIDIA's technological advancements, new product launches, or potential regulatory hurdles. Each of these factors can lead to significant movements in its stock price, making it important for investors to stay vigilant. To navigate NVIDIA's volatility, diversification remains a critical strategy. It's risky to bet too heavily on a single stock, especially one as prone to fluctuations as NVIDIA. A well-rounded portfolio consisting of both high growth and stable assets can help mitigate the risk associated with investing in volatile stocks. Investors should also consider adopting a long-term perspective, understanding that while the stock may experience short-term volatility, the company's future prospects in AI and GPUs remain strong. NVIDIA's path is filled with both exciting opportunities and significant risks. While the company is leading in AI and GPU markets, it must navigate volatility and competition to maintain its dominance. If you're considering investing or following NVIDIA's journey, understanding these dynamics will be key. Don't forget to subscribe and hit the notification bell so you don't miss out on future updates on NVIDIA and other major tech players. Stay informed and make smart decisions.